Welcome everyone. Thanks for joining us today in this live webinar where we take a look at current price action and connected everything to that, price action and the Forex market, of course. First of all, we are going to take a look at the PowerPoint here to take and discuss and take through some basics that we have to show you, such as the disclaimer. There it is. This material is developed and this presentation is intended for a global audience. Please take into account that the info in this session may not be suitable for everyone. To get the corresponding information on charting conditions and other details, please visit www.admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, trading for exchange or global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational and informational purposes only. All right, so by continuing watching this webinar, you agree with the disclaimer mentioned here and on the website admiralmarketsglobal.com. And I thank you for your attention. It is important to note that the risk is your decision to take, as always, of course, and that trading is a risky business. Today's topic is going to be Camarilla, pivot point indicator, and intraday trading. If you're new in here by any chance, let me know. Otherwise, I'll assume that you're quite familiar with our structure and setup. As always, we have these things to look at: the trend, opportunity, filters, trigger, and entry method as a go-to checklist, so that we are, not trading at any random spot, but something that makes sense according to our trading plan. All right, let's take a quick look at the calendar today. As always, USD core CPI apparently, but in the meantime, not much, only a lighter news impact here on the pound, a couple of hours from now only, and basically some Spanish news. So that's going to take a while. So nothing heavy hitting the Forex risk calendar here in the near future. So I was a bit distracted the last few days. Some of you, I still owe you an email, so bear with me there as I try to catch up, do some private stuff there. But now the market again. I didn't really look much at the market yesterday. As I said, I had to catch up a bit. But today, what is happening here with some pairs? Let's take a look. First of all, maybe before we start looking at intraday trading, how has the month been going so far for you? This is already the 22nd of July, which means, let's see, how many days do we have left? I think 8. My calendar isn't working. I'll look at the other PC. We have indeed 8 days left. Oh, there it is. Before we head into August. August, of course, can be sometimes a bit tricky because of slower movements. Might have to adjust our trading plans to that. Could be good to check previous August if you trade at least in a higher time frame, of course, because otherwise you wouldn't be able to see that data all the way that far back. But if you trade 4 hour, maybe hourly, I'm not sure how far the data goes back into the past by heart, but you might want to adjust your outlook sometimes, the time frame to use, the strategies you use with August trading, and you can see that July is pretty choppy as well. This is the euro dollar, and although there is some structure here, I'm not saying yes we did have some upside here, yes we did have some downside here. All in all, it's quite a tight range what we have here, 200 pips from top to bottom. So most recently we had a harami or hammer here last week, indicating some support. Would that be enough to send it to the upside? Maybe, but then again, we do see also a pretty steep angled 21 EMA band, which might be strong enough to push this through the support. So we're stuck basically in between these two levels, right? What will win? The support or resistance here. One of them is going to crack eventually. We're not going to stay in this very, very tight 50 pip range forever. Price could go both ways. I don't really have any favorite here at the moment. If price does break above the 21 band at the weekly pivot point, I would say there's a decent chance for some breakout up to the monthly pivot point. If price does break down below the pin bar, we might have some breakout to the downside. All right. So as I said, 135 is an important level. Last week I was talking about the importance of 135. But if it pushes a bit below 135, it's not a game changer necessarily. And that's what happened. We had a push below 135, but we hit 134.90 and bounced. Would you consider this a very big bearish break? 99% would probably say no, right? Because we see a big hammer breaking it. So we obviously see a lack of follow-through, even if it did push through under 35. So that's why I was cautious with picking just a level. 134.50 for various reasons could change things, because then we're clearly breaking through this bottom. And then, of course, a bearish structure is undeniable, or starting to become very likely, to put it still mildly, and a follow through to the downside would seem pretty logical. So I'm talking about higher time frames at the moment, although today is the intraday time frame webinar. Just because in the euro dollar, I think it's the time frame that makes the most sense to look at. Sometimes there's certain pairs that make more sense in a way on a particular time frame. The hourly could look totally confusing, but the daily could look great, or the daily could be a mess, but the hourly could look great. And sometimes you can vary. That can vary, right? It depends. This is a clear downside. This is a clear choppiness. So will we retrace to higher grounds, retrace more of this downside before we might hit resistance, or are we going to break now? That's the question. So one way of keeping an eye on that is, well, we had actually already a break here on the hourly through that. Or we're actually now trying to break, to put it correctly. Would this be a good breakout? Well, I guess it wouldn't be that bad. I would have some severe issues with it, in the sense that it's so close to potential support that I would probably skip this upside. I mean, we already had a bounce yesterday here off of this level. I think I said it yesterday in yesterday's recap. That is a video analysis that is released on the wave analysis page right here. By the way, if you go to animalmarkets.com, click on analytics, wave analysis, here, weekly overview. Why is that an important level? Because it's like an inverse head and shoulders here, right? So this could still be a double shoulder. So maybe not, but the space here is very limited before we bump into the bottom of the this potential head and shoulders, before we bump into the bottom of the hammer on the 4-hour chart where I have the blue circle, before we bump into daily S1. There could be some scalps to the downside, but an intraday swing, I think, is not the best of odds. It could happen, but that's something that I would say I'm jumping for joy to trade. Basically, too close to this bottom right here for my taste, basically. And looking at R2R, it is too close. So I personally rather look for a potential bounce or a break to the upside, back to the top of that wedge. And I'm only looking for shorts personally if we really start to break below 134.90. That will probably not happen today, but let's say tomorrow, then, or maybe even later today, then looking for some intraday shorts makes sense, or maybe even swing trades. Pound dollar is, or has bounced off 170.40. All right, 170.40 is a big level because that is a monthly resistance level, and we use that as a support level again. Now, how likely do I find that to get some upside? Now, I actually am more looking at it as a bearish reversal potential. In fact, if anything, yes, daily chart is still up, but there are signs of exhaustion. Let's take a look at that. Now, obviously, we had a great uptrend the last year on this pound dollar, and there are many places where this pound dollar has been flying to the upside, and we can see that quite intuitively by using this 21 EMA band. You can see, although price action candlestick patterns are blocking it, let me take that away for a second so you can see that a bit better. There. There we go. So very intuitively, we see this uptrend, right? Where price was above the 21 band, most of the time, pretty good continuations, and a few times price dipped below the 21 band, only to actually turn out to be a retracement. Could this be again such a scenario? It could, but every time we did dip below the 21 band, it took a while before we got back above it. So I think we have enough time to realize that this could be one of those retracements again here at the very minimum. But who knows, maybe a reversal even. We'll find out soon enough. For the moment though, bearish pressure despite the uptrend. If we look at the AO, we already had a turnaround here on the AO when looking at the histograms from green to red about a couple of days ago, a week ago approximately. Let's see, the 4-hour chart is showing significant struggle right here. This could be considered a consolidation, but the problem is that we failed here. That could have been still considered a follow-through of the uptrend, just didn't push through, and we actually made more downside. So that could be retracement, and we had divergence between these tops. What happened after that was a correction, so we broke the correction still to the upside, but then kind of had a failure there and are now below the 21 band again. And that is used as a potential downtrend / resistance on the 4-hour chart. Now it's still very early, very, very early in the game, and if anything, reversals just take some time. And often enough, it's just a timing question. Sometimes traders are pretty accurate in having an idea when the reversal happens actually, but enter too early, enter too late. The timing is pretty difficult. It's less important on the trending environment, especially if you take a bit looser stop loss. Then time is more on our side, because even if it takes a couple of candles and price goes sideways, you know, if it's the fourth or fifth bar, usually then it goes our way, right? Sometimes it can take longer, and then it depends if you use a time rule or not, if you exit that trade. But with reversals, it can take just pretty long, because sometimes the whole formation starts as a corrective. Even though this has been moving down, all in all, it's been quite slow, quite consolidating. So it's not easy to trade a reversal like that. I think that a crucial level, let's see, will be this 169.50. Well, 170.40 will be important too. Don't get me wrong. If we break below that, that would signal definitely some bearish potential. But when we break below 169.50, then I think we really have serious reversal potential back down to 168, 167. So those are below 170.40, we have at least some space down to 169.50, I would say. I would say these are the zones that we could be looking for here if we do break below. So just like the euro dollar, we're kind of caught in between support and resistance coming in. So more so than the euro dollar, though, I think that the euro actually looks better for a breakout to the upside than the pound dollar to me, but both have the potential to break below or break above. We're getting squeezed in the tighter zone. On the pound specifically, if we do break to the upside, be careful of the weaker pivot point. And on the pound, this trend line I think looks pretty good for intraday trading / swing trading. This orange trend line here. Let's zoom into the 15. Looks like a bear flag, in fact, or maybe a contracting triangle, depends how you look at it. If we throw in and add some chart patterns to the mix of analysis. So this is something that I would say is not bad. Obviously, the environment during the summer could be disadvantaged for a breakout like that. So one might not take the direct breakout as an entry, but one might rather wait to see how it breaks out. Let it make a smaller bear flag like this during London session, and then take the continuation. This safeguards basically a risk when price would do this and close in reverse like that. And no harm is lost if that would happen. But I do like the potential. It's a bit early. One thing as well, this is the hourly chart, by the way, a break below 170.68, which is the 21 EMA band here, and the fractal at the band. A close of the hourly candle below 170.68 here would probably also signal a decent breakout. So instead of looking at it at the 50-minute chart, one might want to think about looking at for an hourly close below that 170.68 because of and why that level? Because of those two reasons: the bottom of the band and the fractal. The fractal is basically showing engulfing twins there. For those that cannot see it, I'll zoom in right here. So if we break that, that could be a bull bear, indication on this time frame at least, and we would at least be making a lower low, maybe even a lower high here. So that makes sense. Let me see if there's anything to add. Well, I think this pound dollar doesn't have much chance of uptrend, despite the uptrend, funny enough. But the reversal, I think, will probably see a bit more acceleration once we break below this level. Then I think we will see a bit more faster follow through, especially because we already saw an impulse here. So this could take some time, but once we push through, I think it could be a relatively speedy fall down to this level. Then with the pound dollar, we really don't know. We could see an aggressive upside again as well. Be careful of that because the pound has the tendency to do that. It could make a spike up like that, hit resistance, and then fly down again all the way to this 168. That's something that could really happen. I could picture it. I could just see price doing it like that, right? That's not too important if it really does that or not, but the reason why I tell you this is not to necessarily predict the future. That's not my purpose, but it is to warn you that if you take any shorts, if you do successfully take shorts in this zone, to be careful with taking profit at 169.50. That's really the reason, because we could be exposed and vulnerable to a pretty fast upside again after that. That's the main reason. Also is that then hunting for another short here when it does make that spike up, although sometimes difficult to catch, could have its merit for that 168 target. So those are the primary reasons. Now, if that, don't get me wrong, I mean, this is not a guarantee, by the way, and never ever will a trade 100% work, of course. This is just my thoughts for myself. Let's see. I got two questions. The first one from Mutaza. Thank you so much. what is the AO? The AO is an indicator at the bottom. Sorry for the delay. It's called the awesome oscillator. You can find it by going to Insert, Indicators, go to Bill Williams, go to Awesome Oscillator. And the abbreviation of that is AO. It's basically very close and similar to the MACD. There are a lot of usages for it. One of them is to look for divergence. If you're aware of that concept, that's great. Other is for retracements when the retracement is finished, because then the AO is often back at the middle line, which is called the zero line here. It's halfway. It indicates when price goes back like this, or when it's trending. It also is pretty useful for placing fibs, because when price has completed from here to upside, this is kind of like one swing, which means you can use a fib on that leg for even for wave analysis, actually. It's quite multifunctional. We have webinars, by the way. For those that want to learn a bit more about AO, go to admiralmarkets.com, go to education, go to webinars, go to video archive, and you can look one by one, or you can press Control F and say, okay, look for oscillator webinars. And here you have it. 30th of January was one, and the 12th of December. Those two could be good to watch. You can watch the recording like that. So that's what I would recommend if you want a bit more detailed explanation. Great, Bob. Thank you for joining in that case. That's great. Do you trade together as well and analyze together by any chance, or is it something you do separately? I got a question from Wei. Would it go back to test 166 before uptrend resumption? I think 166 is the top of a 5-year range. Yeah, that's an interesting observation, because it is something that I thought about as well, that 166, 167 could still be a support level. One of the things that is supporting such a analysis is, if I could put a line there, is indeed, well, it was a top here that has been broken, and here as well. That, of course, is always interesting, just like here. It is a bottom as well. And therefore a potential support level. You can see if we look at the weekly 21 band, which I don't do often, but if we look at it here, we see that every time price did retrace to, let's say, the top of that 21 band, look here, and here, and here, and here, 5 times. Other times price was above it and didn't touch it. It did bounce. So now that's one reason maybe the 169.50 could be important, because that's the top band of the EMA 21 now on the weekly. But it could even extend, if we break below it, down to 167 indeed, and potentially bounce roughly at that level for follow-through. Why would we necessarily get follow-through? Let's take a look at the monthly. We did break above this level. So what could happen is break, pull back, and continue indeed. What would be a target of such a continuation? Maybe 180, minus 272. So could be, but that would only be in vision if we really get more confirmation of that upside. Because who knows, we might break, we might bounce here at 167, make a head and shoulders like this, and then start to move down as well. That's another option. We have to be realistic and be open to, of course, both potentials. All we know, though, is that we know of certain support levels and potentials between those support levels. So 170.40, 169.50, 167 are important levels. If price breaks below them, we have potential for downside. If it starts to reach these levels, then we might have potential bounces to upside. Especially if this starts to move down like this and then starts to take long with the upside, then we could see potential head and shoulders in the picture. And obviously, if we then break below 167, we could start retracing this entire upside. Then we can put a fib from this bottom to top. And we would see spaces between these fibs, which are pretty big spaces, don't get me wrong. These are hundreds of pips between them. But that's, pretty far in the future, but just to give you an idea, because indeed, so I agree with you, Wade, there, definitely. I think so too. Let's see how much and how fast and when exactly this is going to happen, because it could test our patience. It could take a while, especially with August and now the end of July. It could turn into a massive spikes up and down here as well in this zone. For instance, or the movement could be even quite tight. So that's using 21 EMA bands on various time frames. That's why sometimes, for those that are here more often, know that I also use 34 sometimes. Why 21 instead of 34 in this case, today's webinar? Well, because 21, I like it in the fact that price, it's just a bit close to price. It's also a fib number, obviously, and it interacts with price just a bit more. Many traders use 18, many traders use 20 as well, so it's pretty close to those numbers. But in general, it just interacts more with 20 with price. Also, Bollinger Bands, although I don't use them often, I've heard use 20, so another reason maybe. So I guess that's all on the pound dollar. Let's see, any comments still? That's great, Bob. Thank you so much for that. So if you have any questions, I think that Murtaza, I'm getting my vowels mixed up, then let me know, of course. But those webinars could be very handy for looking at what the AO can do. I also have a stochastics at the beginning here, at the bottom, but that is not as important as the AO, in my opinion at least. Let's see let's take a look at the AU, the Aussie now. The Aussie is really not so interesting. It's quite choppy. And just like the euro dollar, quite a tight range with roughly 94.50 and 93.20 as the boundaries, with one exception here, the spike. Not too appealing. Let me take a look at the 50-minute chart. The 15 is, let's take a look here. I don't see the Camarilla on this chart somehow. I must have, let me refresh the template, hang on. I want to see where the Camarilla levels are because it is part of our focus today. Ah, there they are. Well, on the 50-minute chart, it certainly does look like it's building. It was building an ascending wedge or triangle, a bullish-looking triangle, in fact, indeed. So, with the H4 breakout here, certainly it's something to consider, looking for potential bullishness there. Now we've already moved away from that spot, unfortunately. Let me take a look at the 5-minute now. Well, we might see some follow through on the 5-minute chart, it has eaten up quite a big chunk of real estate already. What we could see is now a pullback down back to the H3. It could still be a bouncing spot for one more push up here, like that. The hourly doesn't look too interesting, but if you look at the 15 and 5, we might have some break follow through to 94. Why 94.06? Here we have H5. We have an ATR expected high. We have a daily R2 close by, and we have a bigger top here. So that's the resistance zone, what price might get up to. Obviously, we're already pretty close to it, so we need a bit of a discount before that last push is maybe tradable. Let's see, QE. Kind of similar spot, close to support as the euro, sorry. Close to support, but fighting against the 21 band on the 4-hour chart and using it as resistance. I don't really see that much of an appealing setup here. Now that we've broken below the 21 band on the daily chart, though, there could be reason to find a bit more retracement. We can put a fib from top to bottom here. Yesterday was a pretty big pin bar as well. If anything, it looks bearish on the daily. Let's take a look again at the 4-hour. Harami at the band. That could have been an interesting short here. Right there, when we closed below that band, just barely, and had a Harami after we touched the weekly pivot point. So that is an interesting price action signal at pivot points, but also at moving averages, which is a pretty neat confluence yesterday. Not that that short is working marvelously, but at least up some pips, and I think interesting confluence there. So maybe downside on the Kiwi is actually looking a bit more likely effect. Looking at the daily, the 4-hour, this is hourly down 215 down. Maybe see a breakout here. Although they're risky, but we could maybe see a breakout below daily S1, below the 38.2 fib for potential downside. Could be an intraday trade to keep an eye on. Breakouts are in general not maybe it's not the best of environment during the summer, but maybe waiting for price action signals like this, for instance, is a bit more secure. Give it a bit more time, maybe, because it takes a while before it continues. Those could be better, maybe, or just 4-hour Harami than taking this breakout. But just analyzing what we have now, and then this probably makes the most sense at the moment. It's actually a trend line that you can extend further to the left and use multiple bottoms. Let's see. Oh, sorry. Kalian has a question regarding, do you see it going to 87.50, 87.70, 87.50, 87.70? Let me take a look. Well, it's possible. It's still within last week's high. Last week's high was 88.23. I wouldn't expect price to go above that, considering last week's bearish weekly candle. So, I mean, anything that stays under 88.20 is a potential place where price could still move up to, and then see potential downside again. But it doesn't really have to get up there. That's a bit of the question indeed. If you look at the daily, what I don't like about upside at the moment is yesterday's pretty bearish candle. So if I had to choose, I would say that those chances don't look that great at the moment. But if the euro dollar does bounce, then maybe this Kiwi, it could take this, how do you say this, pull this Kiwi as well to the upside, and we could see failure here maybe. I mean, failure in the sense like like this, for instance. Not follow through to the downside. And in that regard, we could put, if that does happen, we could put a fib from top to bottom here, and minus 272, and the minus 618 would be the most likely spots for price to find resistance. That's at 87.40 indeed, and 87.65. Euro is continuing with his downside, so that I think is worth taking a look at, because we already had a break here of that downside with a hook back, again a break, a hook back, again moving down here. Looks like price is slowly but surely pushing through support, although it's going choppily. Let's see, here we had a shooting star, bearish candle, Harami engulfing. If we look at the daily chart, it looks like the 21 band is like surrounding price and not letting it through its defense, not letting through it and break it. And every time price tries to get through it, it just slammers it down, hammers it down again, slams it down, stops it. Time in, time again, it's quite often big consolidation zone. So the fear for price to break through that could mean that we see a retracement like this and this, and maybe even like this, for more downside here. So that could happen, all good and dandy, but at the moment though, price is already at L5. It's also pretty close to the daily S2, which means that we'll probably have to wait for a bit of retracement, at least back to the daily pivot point, I would say, would make the most sense right there for still follow through to the downside. That would not be so logical to trade it now. The same scenario for pound odd, in fact. Is there any particular pair that, oh, Killian has a suggestion, pound yen. Let's take a look at that. Yeah, I think that could be interesting. Just I need to work out more details, but it does have potential. Let's take a look. We're bouncing off the weekly pivot as we speak. So this looks pretty interesting from a 4-hour perspective. First of all, we had the difference here is that we had a retracement at these red circles, but price after that stayed above the 21 band. What do we see here? Red circle, but what did price do? No, it spiked and then moved back below the 21 band. What is the difference there? Obviously, of course, the trend remained up, the trend remained up. Here we tried it, but it got rejected. So that would lead to me to my thoughts that this is already pretty, I mean, a 4-hour chart already in a downtrend. And we're back at the 21 band, which means we're at resistance potential, especially if you look at the fact that we're also at a weekly pivot point. All right, so that is looking like a resistance spot. 21, let's see, 21 band here is up on the hourly. But that's logical because we're making a retracement on the 4-hour. So we have several options. One would be to trade it right now, actually, as a candlestick pattern potentially. One could even wait for the 4-hour chart to finish for this 4-hour candle. If it does look like a shooting star, you could either be a short right there, or with a stop loss above the candle high or above this top. If it doesn't end up like a shooting star, one could, of course, skip it. If it does, once again, an entry potential there, or waiting for the candle low to break, or even waiting for price to move up a bit and try to sell it upon the retracement of the wick. So sell it about halfway that wick. Another option. The other option is to wait for price to break below with a candle low, 1-hour candle, to let that 1-hour candle close below the 21 band, and preferably below the daily pivot point for a kind of breakout to the downside. If it doesn't end up like a shooting star, let's see. Killian is asking about 173.87. Maybe a fib number. Close to 61.8. Okay, that's possible. Let's see. There is divergence. Good spot. Didn't see that indeed. So that is true. That could be making it a bit more likely that we could see that upside. First, I think the pound yen could be maybe choppy because the dollar yen seems to be moving up. The pound dollar has a good chance of moving down, I would say today. Pound yen could be a bit choppy on the choppy side today. Maybe trading the pound dollar downside could be maybe better than the pound yen. So let's see. If it does get up there, it could be a good zone to look for shorts. If it doesn't, take a look. Maybe it's worth it, but maybe the pound dollar is better. But if it does look like a shooting star, it could get some follow through. It might just take some time, and we might see some ups and downs before that, though. If I put the trend line on the 4-hour chart, then it would look something like this. Depends. Got multiple trend lines possible. Those are all broken, but we can also put a line like that, of course. And you can see that could be the resistance indeed. 1 second, folks. Alrighty. So that could be the resistance line for downside. This pound specifically could be quite choppy, as I said. So although I think the structure is looking like a potential, let me get rid of the candlesticks here. Although the potential here for reversal, I think, is there. It could be extremely, a path with a lot of mine pits and difficulties to actually capitalize on that. Yeah, because if we look at this daily chart, obviously you see every time we actually went back, it was more of a retracement, except with the exception of here where we had a pretty big fall, and here. So those two are the exceptions, but otherwise we had actually this is a retracement. So yeah, we have to be cautious of that fact as well. Here on the 4-hour chart, you see the price did make pretty nice reversal here and retracement here. Something like that could indeed happen, that we have price do something like this, and then one more downsides. That could happen here too. Or was that already here? That's the question. So I would be open to do both aspects of it. Let's take a look at dollar yen, maybe to get a bit better picture. Yes, it is indeed. Good guess, Wei. Good ear. was a mobile hearing test. Let's see. Yeah, the dollar yen remains choppy. It's difficult to say anything about it, in fact, besides the fact that it's in consolidation and on the hourly making some upside and facing intraday resistance as we approach what is commonly for an intraday level quite on the high side as a daily R2. So do we have some space to the daily R3? Yes. Is it a lot of space? No, it's about 15 pips. Dollar yen is very not an easy pair to read. Let's take a look at the Euro CAD. Bob was referring to the Euro CAD, and looks bearish. If you look at the 4-hour chart and the daily, obviously we have a pretty strong 21 band holding price several times now, and price has stayed below it. Now again it's below it. There's a decent chance we can get that follow through. A 4-hour chart is also in a downtrend using the 21 band, and every time price moved back to it, found resistance. So it's now using it again as a resistance spot. 1-hour chart 2 is trying to break below it. Now the only difference is that every time it did break below it, it really didn't find much follow through to the downside. So maybe this London session could change that. We could see a breakout below here for that downside. So What are options? Waiting for this hourly candle, for instance, to close below the band. Could be a swing trade. The entry could be right there, but we also have a trend line. The entry could be below the trend line. Or one could even wait for price to retrace a bit, back to the daily, wait for the daily, and short there. Those are options that I think of at least. Letting it bounce here, if you look at the intraday perspective with L3 here, letting it get a bounce and waiting then for the next break is another way of doing that for an intraday perspective there. I got a recommendation to take a look at Swiss yen. Let's do that. It's very similar to the pound yen, in fact. The Swiss yen had already a shooting star, in fact. Gillian is asking or is commenting 113.17. 113.17. It would be nice if we got all the way to the weekly pivot point, indeed. I'm not sure if it gets there. We already have a shooting star at the daily R2. Not sure if we can get there at the moment. Looking at this fall that we're seeing here, waiting maybe for price to close below this 21 band on the 4-hour chart, for instance, could be something to look for, and maybe even look for a trace of that 4-hour candle, for instance, or break below and close below the 21 band, and then again wait for price to make a small retrace, something like this. Might be the best option. Now, obviously, it's always possible that price can get up to that weekly pivot point still. I'm not saying it's impossible, but the potential reasons are there for it to have stopped there. It was pretty close to that pivot 10 pips shy of it from that weekly pivot. Plus, we have a resistance here. So, yeah, that's a bit of the issue there. I would say that probably putting the stop loss above that weekly pivot point still makes sense, though, to be just a bit safer if price does get there, that the stop loss isn't taken out unevenly, considering the fact that price could just hit that and then retrace from there. So using that then therefore as a stop loss placement would make sense. But waiting for that, one can always wait for that level, but there is a chance that it cannot get there. Like always, of course. I would probably rather wait for, I wouldn't want to sell it here now myself, but waiting for a hook back like that and then retracement, and then continuation to the downside is something different. That could make sense. $144.80 as a target. Let's take a look. L5. For an intraday level, unfortunately, that would be indeed the level to think about. Unfortunately, it's very tight, not giving much space. If you use a swing trade perspective, probably, and there's also not a lot of space, 144.40, 45, weekly, monthly S1 in the bottom. Let's take a look at the daily. But obviously, if we break below it, then we're getting into more space, and we could see a follow through to 142.50, 70, sorry, and then 140.30 eventually. But yeah, it's going to require probably a bit of patience as this is not moving that fast. So I would say that hopefully the stop loss is tight enough here to allow for a decent trade if you look at it from intraday perspective to that target indeed. I'm not sure yet, actually. I'd rather probably wait. If anything, I'm not sure if I want to trade this, but if it does bounce here and then it starts to break below this bottom, then I think it would be worth it. So at that point, if we do bounce here, the entry would be below this bottom here, which is at the moment 105.07, just a few pips below it, but not yet now because it hasn't bounced as yet. Why 45.80? 44.80, right? You mean 44.80 because we have a daily S2 there, an L5, a bottom here, ATR low. Not a lot of space here. $45.80 for a sell. Let's take a look. That would look decently, in my opinion. If it does get that high, there's a pretty strong chance today to see a rejection there occur. Here too, though, the question is how strong of a chance it is for price to get there, and that is a bit more questionable. But if it does get there, then yeah, it's not a lot of confluence, but there is a daily R3. There's not a ton of confluence at that level specifically, though. Gold is still messing about in a range of a range. Swissy is a bit different. That's actually trying to trend at the moment. It's trying to break through this 4-hour correction here. Just closed above the band, 21 band here on the hourly and the 4 hours. That was a good potential breakout there as a swing trade. Right? Take a look here. Price breaks above, traces, and then closes back above it. So that's looking like a breakout trade right there. Let's see on the 50-minute chart. Already a pretty steep move. Not probably you have to eventually expect some retracement, but a follow through might still make sense here on this hot Swissy. Off of the daily pivot, for instance, here, that could be a good one to keep an eye on. Using it again as flat. This is probably about it. Let's take a look at the dollar Swissy. Yeah, it's actually finding some upside. It did break above, below, above. Now again, pushing off of the 21 EMA actually. Broke out of this falling wedge already on the daily chart. Made a hook back to the 50 fib, and now finding ground again above the 21 EMA daily, just like the 4-hour here and the hourly. So it does look like a bit of dollar strength with Swiss franc weakness. I'm not a big fan of the dollar Swissy, but it could be a breakout to the upside. Cheers, Bob. See you soon. Last look at pound New Zealand and euro New Zealand. Yeah, it's pretty choppy as well. I wouldn't actually see anything else besides these pairs. In my opinion, if I had to choose, the EuroCAD looks good. The AUD looks interesting. In my opinion, the Kiwi break probably doesn't look that bad. Actually, it's breaking right now. Pretty strong candle here. So maybe some of you took that trade. The Aussie looks messy, just like the euro, and pounded away, but the pound dollar downside reversals might not be a bad one, I think, as well, as I said. And the others, like the yens, are quite messy. I think euro odd could be interesting maybe for downside, but only after it pulls back, I would say. Yeah, that's about it. I guess that's a summary, my own summary here of what I would say is probably the most interesting. But be careful in general because market could be a bit volatile or lack of volatile. It could be a bit difficult to trade. Yeah, you're odd. I think looking at the 4-hour chart and the daily, it could continue with that downtrend. Looking at the bands there and the fact that we are below the pivots, we're breaking below support again. It does have that potential, but the fact of the matter is that we already pushed down, a couple of hours straight. So, are we at that bottom of that run or about halfway? Both could be true, but there's not a significant edge in trading here, I would say. So I would rather wait for a pullback. Well, if you have any questions, let me know. Otherwise, let me show you what we could expect this week again. Hang on. No, that's the wrong one. There we are. This week, we got tomorrow we have strategy, of course, as usual. We have Nena talking about that's the indicator trading in the evening, tomorrow evening, that is. And Thursday, we're taking a look at pivot points and pivot points. See, there's a small mistake in the webinar time there, so we'll have to change that. But that Pro Learning Lab is in the evening, not in the morning, by the way. But we'll be looking at pivot points twice, once with live trading lab and once with the Pro. So take a look. That's this week's schedule. And for those that are premium member, part of the Animal Markets live accounts, you have a premium webinar on Sunday, by the way. So hope to see you in one of these webinars. So once again, tomorrow morning and tomorrow evening, Thursday morning and Thursday evening, and Sunday. Strategy is tomorrow morning's topic. That's the next webinar. So if you're interested in strategies and forex strategies and how to set up strategies, then you might want to take a look. Okay, I don't see any questions. So, well, thank you so much for being here and your attention and spending your time with me. let's see how these ideas and an analysis worked out. We can do a quick recap tomorrow and see and take a look at the market with a new lens of strategies tomorrow. Oh, Richard has a question. Good. Let's take a look for the, in the meantime, we can take a look at the calendar for the whole week. Meeting minutes tomorrow in the pound, so I want to be careful with the pound still for trading at too long. Meeting minutes and Bank of England governor speaking. Also Kiwi interest rate tomorrow. Be careful of that. Got some big pound news coming up. Retail sales, GDP. So that's going to give indication if we get that upside or downside. This is probably the euro that we're looking at here on Richard's screenshot. Thanks so much. This is a 50 fib and also support turning into resistance. And if price gets there, I think it will be a very interesting level indeed. 144.04. Let's take a look here. Probably 4-hour chart, I think. Let me take a look. Trying to, not sure if that's a 4-hour actually. I don't recognize it, but is it a 15? That's a 50-minute chart. It's a 10-minute chart. Yeah. Alrighty. Let's see. Yeah, gotcha. Okay, let's put a fib here. Let's see. I have it a bit different somehow, but because I have the bottoms here lower, but I do like the 50 fib because it's at the daily pivot point. There's a confluence there. Plus, if we look at the hourly, we see some bottoms in here as well, by the way. So I think it does make sense. Yeah. I was thinking the same. So I see Richard is using a bit lower fib. Now I understand. It's using it from here. I understand. Okay, has the fib a bit different. That's why the 50 matches with these bottoms. Understand. Yeah, that could be the bouncing spot too. It doesn't have to get all the way up to the daily pivot point necessarily. The difference is small. It's anyhow 13 pips, which, well, it's small, but it could be substantial depending how you look at it. But in any case, if a stop loss is placed above this top, then it would be also above the daily pivot point. So what I sometimes do is then put an entry here and an entry here and a stop loss there, so that scale in twice, and it depends if price gets there totally or not. Doesn't have to always be. I could sometimes put the entire risk on one fib, but sometimes I like to spread it, especially if there's a daily pivot point, but also another good level like the 50 at these bottoms might be worth, in this case, to put it on both. But yeah, makes sense. Good stuff there. Thanks for the screenshot there, Richard. Everyone can do that, by the way. But this is basically the fib that Richard was using from here to here, and using the L4 and the bottoms as the bouncing spot for more downside, as I have drawn on this chart. but I'm saying maybe watch out for the 786 and daily pivot point as well, confluence. So both are seemingly looking like interesting levels, but in any case, the swing high started above it, so that's good. All of those levels are at least decently below it. The only thing is, of course, that if it takes too long, then it could be retracing the entire swing high, swing low. That's the only thing you have to be aware of, where I have the red circle there. How to send screenshots? Take a look at, for instance, screencast.com, and you can log in, set up a profile, and upload it, and then send a link to me through the chat. That's how you can do it. So you have to probably set up a quick account, and then you could use it for a certain amount of data for free per month. Alrighty, folks. Talk to you soon, hopefully, and wish you all a great day. Cheers.